Taiwan Semiconductor Manufacturing Company, trading on the NYSE under the ticker TSM, finished its final trading session of 2025 on Wednesday, December 31st, at a closing price of $305.04 USD. This represented an intraday climb of 5.46 USD, or a 1.82% move to the upside, as the market prepared for the New Year's Day holiday today, January 1st, 2026. While the markets are currently closed for the holiday, the momentum TSM carried into the end of the year tells a story that far exceeds the standard narrative of a semiconductor cyclical recovery. Most investors are looking at that 305 level and thinking about the incredible run the stock has had, but the reality that'll hit the tape when trading resumes is far more nuanced than a simple chart breakout. The real surprise isn't just that TSM hit a new psychological milestone, but that they have quietly confirmed the commencement of mass production for their 2-nanometer process nodes at their Kaohsiung facility ahead of many analyst projections. This specific development creates a curiosity loop for any serious investor. If 3-nanometer was the gold standard for the last 2 years, the immediate transition to 2-nanometer production implies a pricing power and a margin expansion potential that hasn't been fully baked into the current valuation, even at these heights. Common wisdom suggests that TSM is essentially a proxy for the broader tech market, a safe but perhaps boring foundation that follows the lead of its biggest customers like Apple stock or Nvidia stock. Many people believe that because the company is so massive and carries such heavy geopolitical weight, its days of explosive triple-digit percentage growth are over. You'll hear critics argue that the sheer cost of building fabs in Arizona and Japan will inevitably dilute their industry-leading margins. However, if we challenge that consensus with the actual data from the last few trading sessions, we see a different picture. The institutional activity we saw leading up to the year-end close suggests that smart money is betting on a scarcity premium that most retail investors are missing. TSM isn't just a manufacturer anymore. They have become the ultimate gatekeeper of the global intelligence economy. While most people are busy self-investing or looking for investment help on basic investing sites, the real action is happening in the way TSM is restructuring its entire pricing model to account for the fact that demand for AI-specific silicon is now outstripping their supply by nearly 3 times. Looking at the recent stock movement, the push toward 305 USD was supported by significant trading volumes that stayed well above the 10-day moving average. This wasn't just a low-volume holiday drift, it was a sustained accumulation phase. Institutional investors, the kind who manage large-scale Fidelity wealth management portfolios or utilize advanced interactive brokers' platform tools, have been increasing their positions. This activity is a direct reaction to the news that TSM is implementing a price hike of between 3 and 10% for its advanced nodes starting today, January 1st, 2026. In any other industry, a 10% price hike might cause customers to look elsewhere, but in the world of leading-edge semiconductors, there is nowhere else to go. Samsung and Intel are still struggling with yields on their most advanced processes, while TSM just reported that their first Arizona fab has reached a 92% yield rate, matching their domestic Taiwanese facilities. This effectively kills the geographic risk discount that has plagued the stock for years. When you combine this with the massive institutional inflows we've seen via Fidelity mutual funds and individual brokerage accounts, it becomes clear that the expectation of a slowdown in 2026 is rapidly being replaced by the reality of a multi-year earnings acceleration. The sector momentum is also working heavily in TSM's favor, as we see a rotation out of speculative software and back into the hardware that powers it. The foundry business model looks increasingly attractive. Unlike a single product company that lives and dies by a specific chip's success, TSM profits regardless of whether the market prefers a specific AI accelerator or a new smartphone. This is the bedrock of the foundry advantage. During the last earnings reaction, we saw a massive gap up that the stock never filled, which is usually a sign of institutional conviction. If you look at the flow on the Robinhood app or through SoFi active investing channels, there's a lot of retail interest, but the heavy lifting is being done by big blocks of shares being moved through the Interactive Brokers trading desk. Macroeconomic pressures like rising energy costs in Taiwan and the potential for new tariffs under shifting global administrations are real, but they are being offset by TSM's ability to pass these costs directly to their customers. When Apple and Nvidia are competing for every available wafer, TSM holds all the cards. Let's step back and look at what this company actually does to understand why these numbers are so staggering. Taiwan Semiconductor Manufacturing Company is the world's largest dedicated independent semiconductor foundry. They don't design their own products, they manufacture the designs of others. This pure play model is their greatest strength. It means they never compete with their customers. Whether you're looking at Tesla stock and its custom FSD chips or the latest Blackwell chips from Nvidia, TSM is the one making the physical product. Their business model is built on massive capital expenditures, often upwards of $30 billion a year to stay 2 generations ahead of everyone else. Older reports might show a cyclical dip during the post-pandemic glut in PCs and smartphones, but that performance is now ancient history in the eyes of the market. The current reality is a 57% revenue concentration in high-performance computing, which is the polite corporate term for the AI infrastructure. They have effectively transitioned from being a chip company to being the sole infrastructure provider for the next decade of digital growth. Now, I want to hear from you. Comment below how many shares of TSM you currently hold, or if you're waiting for a dip below the 300 level to start a position. The psychology of this stock is fascinating because so many missed the initial run-up while waiting for geopolitical clarity that never arrived. Shifting the focus to the future outlook, we have to talk about the catalysts that could drive TSM toward the 400 USD mark in the coming year. The first major catalyst is the full financial impact of the 2-nanometer ramp-up. Since Apple has reportedly secured more than half of the initial capacity for its future M-series and A-series chips, TSM has a guaranteed high-margin revenue stream locked in for years. The second catalyst is the expansion of their advanced packaging, known as CoWoS. Most people don't realize that the bottleneck for AI chips isn't just making the chip itself, it's the complex process of packaging it with high bandwidth. TSM has doubled this capacity for 2 years straight, and it is already fully booked through the end of 2026. This is a high-margin service that adds another layer of stickiness to their customer relationships. If you're using SoFi Investing or Fidelity Investments to manage your portfolio, these are the kinds of structural advantages you want to be looking for. Of course, there are risks. The Taiwan Strait risk is the elephant in the room that never leaves. However, the expectation of a total blockade or invasion is being countered by the reality of the global triad strategy. By building fabs in Arizona for the U.S. defense and tech sectors, and in Japan for the automotive and specialty sectors, TSM is creating a diversified footprint that makes it much harder for a single geopolitical event to cripple the company. They are becoming too essential to fail on a global scale. Another risk is the sheer complexity of the physics involved. As we shrink transistors down to the size of a few atoms, the margin for error is zero. But so far, TSM's execution has been flawless, whereas their competitors have stumbled. This execution gap is the real moat around the company. For those of you using online investment tools like Schwab Intelligent Portfolios or the Robinhood trading platform, the key is to look at the tension between the narrative and the numbers. The narrative says TSM is a risky geopolitical bet. The numbers say TSM is a high-margin, high-growth monopoly that is raising prices and expanding capacity at a record pace. When the reality is significantly better than the fearful expectations of the crowd, that is where the opportunity for alpha lives. Whether you're doing self-investing or using a SoFi robo-advisor, understanding this fundamental disconnect is what separates professional analysis from simple guessing. We are entering a period where the cost of manufacturing the world's most advanced technology is going up, and TSM is the only one with the receipts. The individual brokerage accounts that have been selling TSM on every China headline over the last year have largely been proven wrong by the stock's price action. The volume of Fidelity ETFs and other institutional vehicles holding TSM continues to grow because the global economy has no plan B for advanced semiconductors. If TSM stops, the world stops. That kind of leverage is rare in the history of capitalism. Even the Robinhood crypto enthusiasts are starting to realize that the hardware required for mining and decentralized networks all flows through the same Taiwanese clean rooms. It's a level of market dominance that is almost difficult to comprehend without looking at the sheer scale of their capital investments. As we look toward the next earnings call on January 15, 2026, the market will be looking for guidance on the 2-nanometer yields and the status of the second Arizona